Hi guys, welcome back to ASX Market Watch. Hey, thanks very much for joining me today. I'm checking out all the markets, the whole kit and caboodle, the All Ordinaries in Australia, the Dow Jones, the FTSE in Europe, and the Seng as well. And you know what? All the markets, they are starting to diverge from each other. You know, like they used to follow each other quite solidly over the last 12 months. It was actually quite a beautiful thing, almost poetic really, but now they're starting to really go their own separate ways. It's like they're growing up and leaving home, seriously. But this is one of the things that I really wanted to talk to you about, because last week we got the All Ordinaries, which now I talked about Dow theory, the other part of Dow theory, where the second phase in his three-wave cycle is where earnings catch up to the pure speculation. Now that is basically what we're waiting for at the moment, to see exactly what will happen. So basically, if earnings in Australia do very well, then we will see that move upwards into the second phase of Dow's theory, at least one of his theories. But what is the other scenario? Now that is on the All Ordinaries, because this, I just really want to point this out to you, and it's something that that just disturbs me just a little bit, and it is this. Okay, so this is our downward move. Now, as I said, if we've got like in a few market watches previous, maybe about a month ago, I said we've got our downward move, then our upward move to about 50% here. And then it's highly likely, or there's a higher probability, according to W.D. Gann's methodology, that the market would travel 100% of the previous move. So that would be 100% down again. Basically, that would bring us to about 3,800 on the All Ordinaries. Now, what we've got now that didn't happen at the time because it was about a month ago and the market started moving up. But now what we have is this little ABC correction. Now, ABC corrections, I mean, what they usually do is when they break out, they usually, same again, they will usually go 100% of the previous move. Where will it bring us if we do go to 100% of the previous move? As you can see, there's our 100% level here. That's basically at around 3,800, so on the All Ordinaries. Could it go less than that? Absolutely. 75% is the next strongest one, as is, I mean, 50%. Both of those are very strong support levels, but the higher probability is the 100% level on the All Ordinaries. So yeah, that's just if you're looking at that ABC correction. They're quite a frequent pattern. I think Nicholas Darvis called them a Darvis box, and you know, you can get software to sort of find these fancy boxes, but in all honesty, an ABC correction is an ABC correction. It's also an Elliott wave term. Hundreds of different methodologies really use this sort of thing. Now, to find this as well, the trigger point for this, guys, just to give you the full story here. As you can see, we're still in the short-term uptrend. Why is that? Because we have closed below the short-term uptrend, yes, but we haven't made a lower peak and a lower trough. So what we'd be looking for, we do have our lower peak almost, and if the market was to trade through 4,400, that would be the short-term sell signal on the All Ordinaries at the moment, and potentially could bring us to fruition for this ABC correction down to 3,800. That is one of the higher probability moves at the moment if the market goes and closes below 4,400. And again, only the earnings is going to really tell this. If the earnings disappoints, we're probably going to see that. If the earnings does not disappoint, then we're probably going to see the second phase of Dow's theory. I hope that helps on the All Ordinaries. Pretty cool stuff though, isn't it? I reckon it's awesome. There's a lot of great stuff and a lot of great ways to look at the market. The Dow Jones is the second one that I want to look at, guys, just really quickly. Same deal on the Dow Jones. Dow Jones doesn't have that ABC correction, so it's looking in a bit more solid territory, at least from a charting point of view. And on that, we have closed below the uptrend, yes. Haven't made a lower peak and a lower trough yet. So basically, similar deal on the Dow Jones. We'd be looking for a lower peak and a lower trough to confirm the short-term downtrend. Currently still in a short-term uptrend. As far as everything else goes, yeah, the Dow Jones really has that massive support at 10,000. So like, it just has a huge, look at that. I mean, it's bounced 1, 2, 3, 4, 5, 6. In or around 10,000. So 10,000 is going to be a very solid level. If it breaks below that or about 9,700, potential disaster right there. And also, if you look at it on a weekly chart, it has the potential to be making a Dow theory exit, which is a lower peak and a lower trough on a weekly chart. I'll just see if I can enlarge that actually. Yeah, there we go. So it does have the potential to be making a lower peak and a lower trough if it does trade below the 10,000, 9,700 to 10,000 level. So that's on the Dow Jones. FTSE, that one is pretty simple stuff as well. This is the daily chart on the FTSE. And again, basically similar stuff on the FTSE. Hasn't quite made a lower peak and a lower trough. Very close. We'd be looking at a close below 5,200 to confirm a short-term downtrend. But on the flip side of that, guys, just quickly, what is happening here? We've got shoulder, head, shoulder forming. So potential reverse head and shoulders. Now, a reverse head and shoulders, again, this is one of those moves that does have the potential to go 100% of the previous move. So from the head to the shoulders, it does have the potential to go that same distance up again if it breaks through the shoulder up here. So on the positive on the FTSE would be 5,000, about 5,500 if it breaks through that. That would be a positive, could go 100% of the previous move, which is around about maybe 600 points. So that's a pretty good move. But again, on the downside, we're looking at 5,200, and that would be the sell signal according to trend line theory. So there is our trend line, and there's our almost lower peak and lower trough. Hope that helps on the FTSE. And last one is the Hang Seng. Still kicking, but love the Hang Seng. It's the only one that's still above its uptrend line. And I'll just get rid of this other stuff. As I've been talking about on the Hang Seng, we're looking at a longer term Elliott wave pattern on this one. And now what does that mean? Quickly, I'll really show you. We've got 1, 2, as you know, Elliott wave goes in 5 waves, guys. 1, 2, 3, 4, because we've got our ABC correction. There's that ABC correction again. Yes, it does pop up quite often. It's just amazing. So ABC, that is our 4th wave. At least that's how I'm viewing it at the moment. And then potential 5th wave up to about 25,000 as a minimum for the Hang Seng. Again, the market is still above its short-term uptrend line, so it's still in a short-term uptrend. It really is the only market today that I'm looking at that is above it at the moment. So go the Eastern world. Yeah, still doing okay, I guess. So guys, thanks heaps for joining me. It has been great to have you. And hey, it's always good to check out the market, and it's really good to have people to check out the market with. Really, it truly is a fun way to pass the time, definitely. Now, please check it out next week. We'll have a whole bunch more tools and stuff like that, ways of checking out the markets, ways of seeing where we're heading. It'll be great fun. Stop by, check out the website at asxmarketwatch.com. It'll be great to have you. Until then, I'll see you next week.